Sue, of course, we always go through what Warren Buffett's firm likes, and he doesn't seem to like General Motors that much.
No, and that's interesting. He cut his stake about 10% this quarter. It's the third quarter he's cut back.
What if I told you that one of the greatest investors of all time just sold his shares in one of the biggest automakers in the world? What does it mean for the future of cars and transportation? This video will reveal the secrets behind Warren Buffett's surprising move to dump his GM stock after 12 years. And we'll show you how it relates to the rise of electric vehicles and self-driving cars. Warren Buffett is known for his long-term value investing strategy, which means he buys stocks of companies that he believes are undervalued and holds them for a very long time, sometimes decades. He's also known for his preference for simple and stable businesses that generate consistent cash flows and have strong competitive advantages. His famous investments include Coca-Cola, Apple, Bank of America, and American Express. However, one of his investments that has not performed well in recent years is General Motors, or GM for short. GM is one of the largest automakers in the world, with brands such as Chevrolet, Cadillac, Buick, and GMC. GM was founded in 1908 and has a long history of innovation and leadership in the automotive industry. However, it faced many challenges and crises, such as the 2008 financial meltdown, the 2014 ignition switch scandal, and the 2020 coronavirus pandemic. Buffett first invested in GM in 2012, buying 10 million shares worth about $260 million. He steadily increased his stake to 80 million shares, worth $2.4 billion by September 2020. However, in the third quarter of 2020, he sold nearly half of his holdings in GM, reducing his stake to 43 million shares worth $1.5 billion. He sold another 10 million shares in the fourth quarter of 2020, leaving him with only 33 million shares worth $1.3 billion as of December 2020. Why did Buffett sell his GM stock? What changed his mind about the company? There are several possible reasons why Buffett decided to exit his GM position. Let's take a look at some of them. One reason could be that Buffett was unsatisfied with GM's performance and growth prospects. GM's stock price has been lagging behind the S&P 500 index for the past decade and has barely recovered from its lows during the 2008 financial crisis. GM's revenue and earnings have also been stagnant or declining in recent years, as it faced increasing competition from other automakers, especially from China and Japan. GM's market share in the US has fallen from 22% in 2012 to 17% in 2020, while its global market share has dropped from 11% to 9% over the same period. Another reason could be Buffett's concern about GM's exposure to various risks and uncertainties. One is the ongoing negotiations with the United Auto Workers (UAW) union, representing about 50,000 GM workers in the US. The UAW has been demanding higher wages, better benefits, and more job security from GM, and has threatened to go on strike if its demands are unmet. A strike could disrupt GM's production and sales and hurt its profitability and reputation. Another risk is GM's legal liability for its faulty ignition switches that caused at least 124 deaths and hundreds of injuries. GM has already paid over $2 billion in settlements and fines related to this issue, but still faces more lawsuits and investigations from various parties. However, despite these efforts, GM still faces fierce competition from other players in these fields. One of them is Tesla, the undisputed leader in EVs and AVs. Tesla has a huge advantage over GM in innovation, brand recognition, customer loyalty, and market valuation. Tesla's stock price has skyrocketed by more than 700% in the past year, making it the most valuable automaker in the world, with a market cap of over $800 billion. Tesla's CEO, Elon Musk, has also been vocal and critical of GM's strategy and products, often mocking them on social media and in public events. Another competitor is Toyota. the largest automaker in the world by volume and revenue. Toyota has a strong reputation for quality, reliability, and efficiency, and has a loyal customer base in many markets. Toyota is also a leader in hybrid vehicles combining gasoline and electric power, and has been expanding its EV and AV offerings. Toyota has a market cap of over $200 billion and has been outperforming GM in sales and profits for many years. A third competitor is Volkswagen, the second largest automaker in the world by volume. Volkswagen has a diverse portfolio of brands, such as Audi, Porsche, Skoda, and Lamborghini, catering to different segments and regions. Volkswagen is also a leader in diesel vehicles, which are more fuel-efficient and less polluting than gasoline vehicles. Volkswagen has invested heavily in EVs and AVs and has ambitious plans to challenge Tesla's dominance in these markets. Volkswagen has a market cap of over $100 billion and has been growing faster than GM in revenue and earnings. These are just some examples of GM's competitors in the automotive industry. There are many more, such as Ford, Honda, Hyundai, Nissan, BMW, Mercedes-Benz, etc. Each has its strengths and weaknesses and is trying to gain an edge by innovating and adapting to the changing customer preferences and regulatory environment. Buffett's decision does not necessarily mean you should also sell your GM stock. You might have different reasons or motivations for investing in GM than Buffett did. You might have a different view or opinion about GM's future than Buffett. You might have a different time frame or horizon for holding your GM stock than Buffett. You might have a different risk tolerance or diversification strategy than Buffett does. Buffett's decision doesn't necessarily mean you should buy more GM stock either. You might already have enough exposure or allocation to GM in your portfolio. You might have other opportunities or alternatives offering better returns or lower risks than GM. You might have other constraints or considerations that prevent you from buying more GM stock. In conclusion, Warren Buffett's decision to dump his GM stock after 12 years is a significant event that deserves attention and analysis. It reveals a lot about Buffett's investment philosophy and strategy, and his views on the automotive industry and its future trends. However, it doesn't mean you should unthinkingly follow his example or ignore your judgment and research. It would help to make an informed and independent decision based on your goals. If you have any questions, comments, or feedback, please leave them in the comment section below. We'll try to answer them as soon as possible. We appreciate your support and engagement. And if you want to see more videos like this, please subscribe to our channel and hit the notification bell to stay updated on our latest uploads. Thank you for watching this video till the end. We hope to see you again in my next video. Until then, take care and stay safe. Bye!